Hello and welcome to What the Papers Say. I'm Martin Friel, editor of Insurance Age, and joining me today to pore over the trade press is Jonathan Swift, editor of Post Magazine and news editor of Insurance Age, Louise Meeson. Thank you both for joining us today. The big story this month is the RBSI sale. Jonathan, RBS has been told by the European Commission that they have to sell off their insurance assets, but the bank are convinced they're going to sell it as a package, including NIG. Do you think NIG is going to have to be sold separately, or can they be sold as part of Churchill and Direct Line?
Well, of course, we have been here before. Last year, when RBS put the insurance businesses up for sale, at that point it was talking about the whole unit, which included NIG, Direct Line, Privilege, Green Flag, Churchill, etc., etc. And there was a lot of speculation at the time, about NIG and how it fitted in with that whole group of companies. And I think it really is about who actually buys the company and what they do with them, because you could see someone like Zurich coming in and buying the business. They would probably quite like the direct brands. They'd also probably find a home for NIG too. Whether it would stay on NIG or be rebranded, I don't know. Travellers is another company which is being linked with the, buying both the whole lot as well. And again, that might find a home for NIG. But I think if you talk to a number of brokers out there, they are probably quite sceptical. And interestingly, Stephen Hester, who is the boss of RBS Group, when he was talking about selling it as a whole, only mentioned Direct Line and Churchill. It wouldn't surprise me if he hasn't actually got a clue who NIG are.
Okay. Is it feasible that somebody would buy the whole lot and then sell off NIG by itself?
I think that is feasible. I mean, NIG, as we've mentioned, is quite a different beast to the other parts of the business that we've talked about. And that could be quite a strong possibility.
But I think the one thing you can say about, Hester, he has given himself quite a long leeway here, hasn't he? He's given himself till 2013, which, last year when the business was up for sale, it started off with Mr. Goodwin going out there and saying, we're going to sell RBSI, but only sell it to an insurance company. Obviously, as time went on and the economic climate got worse and worse and worse, private equity houses were allowed in. Obviously, Mr. Goodwin left. And then obviously they didn't get the full value for it. It's quite interesting that it's so soon back on the market. And it perhaps is a case that some people out there are hoping that they're going to get it for a song. I think that they are going to sit, perhaps hold tight and hope the markets do pick up. And of course they have mentioned an IPO as one of the options too. And again, that is kind of probably very much based on whether the markets do pick up.
It's interesting you say that, because that brings us on to a story that you picked up, Louise, from Insurance Times about OVO and Philip Hodgson. They're thinking about floating, apparently.
Yeah, apparently this is a story that's followed on from their recent results, where they made a £400,000 pre-tax loss. He mentions in that, Mr. Hodgson is talking about the possibility of floating sometime before 2012, which seems to be quite a current theme at the moment. There seems to be, as you mentioned, RBS, also on the front of Post Magazine, Hyperion Insurance, mentioning something quite similar. And yeah, I just thought it was quite an interesting theme, whether this was something that a lot of different businesses will be looking at the moment.
Is there anything in this, or is it there seems to be a lot of ifs, ands and maybes involved? Is it pie in the sky?
Well, I think there's always, all those different questions really when it comes to these consolidators, because, the whole model's really kind of predicated on acquisition and then an exit, and there's been talk about some shareholder unrest with some of the kind of older shareholders who had companies that were bought by OVO, and probably were expecting to see some kind of, hard cash before now. I don't know whether, they will now be pacified by the thought that they might get some money by 2012. They might be wanting to go and have a nice holiday before then.
Well, looking at Insurance Age this month, sort of resident Tony Cornell has got some quite strong things to say about aggregators and brokers playing on aggregators. Yeah,
it's a bit of a warning really for the whole of the market. He's talking about the fact that he believes anyway that insurers are a lot more wary about aggregators than they were at first, but that brokers perhaps haven't, are not quite so wary themselves and should be. The fact that they don't have to worry about claims expenditure straight away, maybe they're getting kind of lulled into this, into this using aggregators more and more to pick up volume of business. But it really quite a stark warning actually. Saying that, as the aggregator business increases, so will the loss ratios. In the end, it could destroy their businesses completely. And then he goes on to talk about the commercial side. saying that that's an area aggregators haven't really tapped into yet.
But he does say, and it's, I think it's quite strong, and I'd be interested to see what you two think, it will decimate income, lead to a large increase in disputed claims, and in time, every player will suffer. Are aggregators that bad, Jonathan?
Well, I mean, you've obviously seen some of the big players come off on the kind of personal line side. There is an argument, which from some of the aggregators saying, well, those guys who've pulled off obviously didn't know how to pay the aggregators in the first place, and that there are some people out there who are making money on aggregators, or at least claim to make money on aggregators. I think it's quite interesting what it says about the commercial side, because the whole move towards online commercial has been talked about for quite a few years now, and whilst again there are some perhaps signs that there is some movement there, I'm not entirely convinced that it's going to be, you know, around the corner in the next 2-3 years in any kind of major way. Not like the personal line side, for definitely.
Yeah, it's a very different market. I can't see that it could decimate it, to be totally honest. There'd have to be huge advances in technology and you know, and everything, I think.
So commercial brokers have got a bit of breathing space there.
I think so. I mean, it's quite, you know,
they shouldn't just, you know, sit there on their hands and think it's all going to be okay, though. I mean, they should be very wary of the online threat, and I think you do see a lot of commercial brokers, you know, moving into that space, and with the help of some of the big insurance companies, they are helping the brokers in the online space. It's just a case of, you know, will aggregators be actually considered a market for commercial? I'm not convinced. I think there will be a movement towards some commercial online. It's just how big a market share they actually take is really up for debate, I think.
Thank you both very much for joining us and sharing your views. I hope you've enjoyed it and you'll join us next month. But in the meantime, you can catch up on previous editions at broking.co.uk.